Evening traders, it's Friday, long week. Look, I think when you have Mondays off, the week seems longer actually. It's sort of like a hurry up to get to the next weekend. It's one of those things though. I mean, this week has been interesting in terms of the market has been not very volatile, apart from obviously the pound. But it's definitely been building up, right? So we're building up here on a couple of pairs. So we're building up with the dollar yen is trying to recover. The Aussie dollar is tempting to break down to 75, and the pound is trying to start its short squeeze. It's stable at the moment though. I mean, it hasn't really kicked on. Surprisingly, a bit mellow. Perhaps we're waiting for the French elections before we get that out of the way, before we can start to maybe move the euro and the pound against the US dollar. And really, how the pound yen and euro yen go are going to impact how the dollar yen goes. But he's looking quite constructive because stocks are quite strong. Yeah, we had that nice little bounce last night in the US stocks. That took dollar yen with it. I mean, it's still underperforming how far it can go on the back of that. But Dow, DAX is well supported on dips as well. So there's definitely not much fear in the market about these French elections. Now, whether this is unfounded or whether you should be a little bit more worried about a surprise upset or a surprise number. I mean, a surprise number is pretty easy to get. Anything Le Pen above 25 is negative for the market. Quite negative. Le Pen at 30% is probably 2 or 3% down in the stock market at the open. Euro 105. Aussie dollar below 75. Futures down 200. At least in the DAX, that would be the sort of reaction I expect on a strong showing by Le Pen. You can imagine as well if by chance Macron is not the candidate against Le Pen, it becomes a much more volatile sort of situation. Now, if the default situation happens, which is at the moment Macron wins and Le Pen is second, that's fine. The market's priced that in, so it shouldn't be much of a reaction. If anything, a relief rally on Monday morning. And so, that's the way I'd be looking at it. And probably the way I'd be trying to set it up. But now, I'm not going to trade too much tonight. I do have my trade still from early in the week. I got my long Kiwi yen. It's not doing too much. Fortunately, with the Kiwi struggling, the dollar yen rally hasn't been shown through the Kiwi yen at all. So it's sideways about, just a couple of pips under when I opened it. So it's not giving the best return yet. It was in profit for a little bit, but it was mucking around. It couldn't really hold that sort of gain, and so it's maybe 10-15 pips it was up at one point. Now it's struggling with the Kiwi dollar itself. Having a hard time here, having a hard time getting back above 70, and that's not a good thing. Yeah, sorry, we're back above 70, but just broadly, what we want to see with the Kiwi is a sustained rally. This is the same sort of low that we got after the last test last week on the bottom. So at least we've got a little bit of a confirmed level. If it breaks 69.80, then we've got some issues here on this trade. Yeah, this is not good price action though. Yeah, last time I checked it, we were underneath that at 70, so it's a little bit better, but it's nothing to write home about, that's for sure. I mean, with risk on in the stocks, US stocks, you would have expected Kiwi yen being one of the outperformers, but Kiwi and Aussie really didn't kick with that. So perhaps they've got a little bit more issues than first thought. So this trade, I mean, look, you have to be flexible with your trade ideas, right? If it doesn't work out in the first couple of days, there's no reason to be in that trade if it's not the same trade anymore. Yeah, sometimes this happens. Yeah, so you just close out whatever the situation is, loss, small profit. You're looking for moves, right, when you do a trade, not sideways, not pray and hope. You don't commit your capital on the basis of that. Pound, though, I think it's wise to let it have a little bit more time to run. I mean, it's a risk-free trade, so it's, in that sense, it's fine. And really, I think it's got a lot more upside potential than it currently is priced in. Expect to be a lot of polls over the weekend, UK polls. And perhaps that's going to support and cement the idea that PM May's got a lot of lead. If that's the case, then it should be a positive news, positive outcome. Sideways consolidation as well, so that's given it sort of time to shake out the overbought signals. And so, you know, to the top side is definitely possible once we get a little bit more confirmation or a little bit more good news, or even just a euro rally in general. Post Macron win on Monday, that could be enough. Next week's a very quiet week in data, apart from the ECB meeting, so it's not like there's going to be major events there to kick off volatility. The week after that, though, we do have, you know, obviously the NFP and everything in that first week. So let me just double check that. Actually, I don't want to give you the wrong words. I mean, expecting, you know, French elections. Obviously, we've got to get past French elections, but probably they're going to be fine. The reason why people aren't worried about Le Pen, you know, at the moment, or just generally, is that you got two candidates that are leading. One's the centre, and one's the right wing. Now, the right wing with 20% or 24%. Versus a centre with 20% isn't a dangerous thing, because there's 40% people voting for the two left-wing candidates. So, I mean, all the left-wing voters, in theory, should definitely go towards the centre, not towards the right. So he should pick up a majority of that 40%, leading them to such a big 60-40 secondary runoff. So that's the reason why you get that. Obviously, I'm looking just next week, just to see it. CPI is big for the Aussie, very big. Kiwi, remember, was strong this week on the back of a strong number from New Zealand, and that'll be, I mean, our CPI numbers only come out every quarter, so they're closely scrutinised, and we're an inflation fighting bank here in Australia, so if there's any hints of strength, you'll get some definite reaction there. And you got some advanced GDP for the US for the first quarter. Could be interesting. That one could be interesting. Alright, but nothing crazy. No Fed, no live central bank meeting. Yeah, so if you just joined us, TradeAlerter, nice name. Yeah, I'm looking to still buy. Obviously, we just need a catalyst for that next side up. I think that Monday we'll get that from the opinion polls over the weekend. As long as there's no major news from the Labour Party which could derail things, or major news that could derail the election, no scandals, right? No scandals for the Tories, then you're looking at a pretty solid win, and that should support just generally on dips. If the US dollar does make a comeback, then probably the pound will be capped a little bit, but the pound yen will definitely continue its rally. So I'm still looking for the pound yen to break higher. In fact, the pullbacks we're getting in general are not bad here to be thinking about buying. This 139 level is sort of on my radar. If we get down there on some reason that's not ultra negative, if it's just general pound pullback, that's fine. If it's risk off because of French elections on Monday, it's not fine. Yeah, don't be buying into that. Yeah, I mean, it could be a huge event if it comes out that polls are wrong, and the polls have been wrong around the world. So that's why many traders on the sideline, especially compared to this Euro rally. You saw the Euro rally fail overnight. Now, don't read too much into that. Yeah, it looks like a double top, blah blah blah. Got some selling coming through. This is probably just pre-election jitters, nothing else. It's the reason why rallying up there is still there. Yields in Europe are starting to rise again. ECB is going to be trying to put that to bed next week, but the market knows that. So it's a game where, you know, can you be more dovish than the market expects, Draghi? We'll talk more about that next week. You know, that's something on the horizon. Look, short-term selling on the pound cayenne, it's fine, right? You don't need to worry about it. I mean, you don't. I mean, it's not the craziest trade. You just got to be careful about what you're trying to do. Yeah, I mean, if you get a news story out that's negative, yeah, you can sell because it's quite high relative to where we've been. But if it's just based upon price action alone, you know, you got to be wary that you're not getting suckered into sort of profit-taking price action, and then straight buying comes back in. It's hard to know where to put your stop in a sell, sort of in a market which is rising, right? So I found myself avoiding sort of counter-trend profit-taking sort of sell-offs. I find myself getting into trouble in trades I don't want to be in, based upon, you know, breaking a key level, right? So imagine it breaks this level. It look bearish, yeah, on this chart anyway. But it's, compared to where we are and where we come from and where we can go, it's not that big a deal. And so perhaps the support will come back in relatively quick, and then you're stuck and you're like, where do I put my shorts? You go, You get into sort of mess there. Same with the pound Aussie. If we do get a pullback there, we'll be looking at that. 168 would be great, but doubt you're going to get that much. It's just testing 170 at the moment. So yeah, this you shouldn't expect too much. I mean, you might get a little bit more profit taking from the euro into the weekend. You think that the longs that have been buying for the last couple of weeks are probably a little bit hesitant to be holding. Jitters, pre-market jitters, could be enough to get you out. I don't think we're going too far though. I doubt we're going, much further than we are now. Actually, we'll see how that plays out. I think there's a lot of interest to be punting on the long side too. If Macron comes in through this, there is a way, and we'll talk about it next week. There's a way to 110 here, regardless of the ECB next week, and we'll talk more about that. A really telling sign next week will be if they try to be dovish and the market just doesn't respond. And they have to be dovish next week because last time they made a mistake and they didn't come across dovish and the market went full on buying euro for a couple of days before they came out and clarified. Since they clarified last meeting, they have to come out next meeting and be dovish. Right? You can't just say 2 weeks ago, oh, you guys misunderstood us, and now we changed our mind again. They're going to basically reiterate what it is that the sellers last time on that rally to 109 wanted to hear, which is they're going to continue QE for a significant period. That was when they started talking it down. So we'll see how it plays out. It's going to be interesting. Come Monday when we do the update next week. Hopefully we do have some volatility. I think it'd be more fun if we get some high numbers for Le Pen, just for the volatility that will create. That's very negative, and we can be talking parity within weeks if that comes up. That's a huge thing if there's a chance that she can win, because she wants to have a referendum on French exit. Let's have a look at some of the data out regarding the French election. Confused about the euro, Jared. Yeah, I mean, look, Macron win is positive, and then a couple of days later we got the ECB, but I don't know. I think I'll buy any dip they cause either. So yeah, I'll be pretty active in the euro next week. All right, market setting up for wide range outcomes. Comes for use is market-friendly outcome, which allows the euro to rally, particularly against the yen. That's a true story. Dollar yen also be helped in any sort of risk-on rally. Anyone but Macron winning is not good. So they believe, and we're reading Morgan Stanley here. They believe the market's getting less interested in hard Brexit versus soft Brexit, more interested in certainty, political certainty. And so with a strong vote for the government, perhaps you do get more certainty about how things are going to proceed. And then long pound and also pound Kiwi. Pound Kiwi is a good one. It's like pound Aussie, but picking another victim. terms of data last night, you saw those weekly jobless claims came in crazy strong. So they're remaining quite low. I doubt we can talk about there being, you know, any sort of weakness in the labour market. I think the week after next NFP is going to be another strong one. Look, the rolling 1 month I think is the lowest in 17 years. Right, worries about global risk events have pushed down market pricing for June Fed rate from 60% earlier in the month at 60 to 44%. So that can still change a lot, right? That's pretty fluid. At 44%, you got a lot of room to move to zero, which is US dollar weakness, and you got a lot of room to move to 100%, which is US dollar strength. So that will become more important as we enter, say, May. And what they're noting here is risk-off periods, you know, designated by big events, hasn't created, you know, very long outlooks. Days before, you know, the market started to rise again, Brexit for 25 days, Trump winning, going into the polls 14 days, Greece capital controls 14 days. Chinese devaluation, that was a big event, wasn't it? Let's not talk about the Chinese devaluation. Give me some flashbacks. I think North Korea will go into the background, but it can flare up anytime. Mainly from the North Korean side, right, who do another test. Probably they won't try and poke the bear too early, though. Seems like China's getting a little bit more upset with them. So perhaps they'll be a bit more tactical, a bit more delayed, a bit more controlled in the way they uprise. But it's hard to predict them. Not much else there in that one. Alright, we've got the yen impact of a French presidential election. Obviously Macron is positive for risk and the yen's going to be sold, but let's have a little look here. Bonds have definitely increased in price, which means there's a lot of hedging. Alright, the worst case, the market's worst scenario would be runoff between the two extreme candidates. That's Mélenchon and Le Pen. Extreme left wing and extreme right wing. Both of those are bad for the market. Macron is the market-friendly candidate, the market's man. We believe a smooth ending to the French election will put a milestone on the path to recovery in dollar yen to 110, 115. Yeah, that's probably my view as well. I'll be playing dollar yen and euro yen longs next week if there's a good outcome. It'll be pretty common trade too. It'll be pretty aggressive. Soft exit and a hard exit to Kami, TK Hamey. So the hard Brexit is where they don't get access to the Eurozone single market. And perhaps they, sort of control their border, so there's no access for European nationals, no rights for European nationals in the UK, and perhaps the banking access to the single market's not there as well. That's pretty negative, you'd think, for UK financial services, and all the big banks are looking to diversify. Soft Brexit is sort of like Norway's exit, Norway's relationship. So you have access to the single market, pay your fees to get in and out, and agree to certain rules. Now that the problem with that is that that comes with rules about immigration that the UK can't abide by, given the referendum was driven mostly on anti-immigration grounds. So very unlikely that the soft Brexit can handle it, whoever come through. And that's not what PMA is going for at all. Alright, so they're using trigger points of 5 points. That's with a pen, I think 27. If it's above 27 on the exit polls, or as the polls come in tomorrow, or sorry, Monday. Alright, so these are the outlines. Le Pen, the Fillon is probably moderately negative. Doubt that's going to happen. Le Pen, Macron, will be a matter of the results, but it should be positive. That's Le Pen. Yeah, even if Le Pen wins against Macron, they're suggesting buy that dip. Alright, Le Pen Macron is definitely negative. Yeah, now the really risk-on result is if Le Pen doesn't get through. Yeah, that's something I haven't really thought about too much, but that's really risk-on because it's just there's no risk. Alright, so you got some mild euro selling here, mild pound selling, mild Aussie selling. Also a little bit of dollar yen selling, so it's a bit odd. A little bit odd. Let's have a look at gold just quickly, see what it's doing. Well, it's grinding higher, so definitely there's some pre-market jitters here over the weekend. We'll see how the European-US session begins. If you see a bit of another sell-off here in stock markets as uncertainty reigns, then perhaps you will see further downside in the dollar yen and euro. That'll be played out a lot by the euro yen. So the euro yen's moving a lot at the moment. It's one of the most active pairs. Euro yen, where are you? Yeah, down 100 points from last night's highs. Ooh, a little bit cheeky. That's one we're going to be playing a lot of tomorrow on Monday, guys. So we're buying dips on that if everything's okay. And maybe even if they're mildly not okay. Alright. Any questions, guys, tonight? Otherwise, we'll leave it there. It's been a big week, and it's going to be potentially a good week of trading next week if you like that risk-on sort of trading. It's much gentler than risk-off trading. And for me anyway, I can build up bigger positions quite easy. A little squizzy at the Aussie Kiwi for my friend David West. David West has been long on Aussie Kiwi since 104, 103, guys. So obviously he's caring a lot about this this recovery now. It had that big reversal from 110. It's showing some signs of life here, Dave. I mean, pretty important little couple of days coming up. I suspect we're going lower because I think the Aussie dollar is breaking 75, and then if it breaks 75, support's so far away. And that means that Aussie Kiwi goes back to 105. I don't mind buying towards 105 though, because it's showing that it's broadly, that rally based upon is more, I think, sustainable and will happen again. Even if we go into 105, 110 range, 105, 108 range, it still seems a good risk reward to me. I can't see an easy way down to parity anymore. Not with the Kiwi underperforming and the RBNZ so unsupportive of it. But yeah, there are definitely more risks to the downside for the Aussie Kiwi. I know that's not what you want to hear, but it's I think the way the market is playing it at the moment. I mean, CPI next week is very important for the Aussie. It can turn it ultra bullish. It can change everything. And, you know, our stats bureau is very prone to big misses, big numbers. So, like the Aussie jobs numbers was such a huge win, such a huge beat. Perhaps we will get some strength there coming through in our inflation. If we do, that's a big thing, and the RBA has to address it. All right, guys. Trade safe. Don't commit too much before the weekend. We'll definitely do some trading next week, and we'll see if we can't build up some good positions.